I hope you guys are having a great weekend. Excited already to start the week. We have a lot of things coming this week. FOMC, Apple earnings, some data coming out, which can cause a lot of volatility in the market, right? Sorry for sending this video a little bit late. I wasn't feeling well over the weekend. Started feeling better later in the day, so I decided to make this video to help you guys to understand how I use the divergences on the market internals with the chart, what I look for to exit, to entry, and yeah, finding nice setups on key and major levels. But before I start, I just want to remind you guys that I'm not a financial advisor. This video should not be taken as a financial advice. So let's get into the video right now. As you can see, I already plotted some of those circles. The red dots are the bearish divergence, and the white dots, the white circles, they are bullish divergence. Usually, I don't like to. Oh, we already opened a extreme zones on the negative. I'm gonna buy calls. No, I don't like. I waited for 10, 15 minutes, maybe 20 minutes. See if we're making higher highs, and then I play from there. But you're gonna see that those are the major levels I found on Friday. But you can look through all those pullbacks. You're gonna find divergence as well. All the time. You can see right here. One here. Look at high, equal highs. Boom, pull back. But anyways, how you can use the bearish divergence if you are in calls. A lot of people, because they're seeing bearish divergence, they already think about, okay, I'm gonna get puts, which can work really well. As you can see, you had a big move down, right? But if you're in calls, when you start seeing this bearish divergence forming, and the longer they are making, like you see 3 highs, 3 lower highs, this is a sign for you to get out on your calls. And that's how I use the bearish divergence if I'm playing the upside. But if I'm not playing the upside and I'm waiting for a divergence to play the downside, primarily seeing a big move like this, then I'm gonna get inputs. But because we're in a strong move, I'm not gonna expect a big move like this. If I get this move, I will probably move my stop to above my entry so I can already lock my profits and try to ride and move my stop higher so I already lock in profits. Because when we're in an uptrend, like you see here, we had a nice uptrend, right? This could have been here too, a pullback and then start making higher highs. And you're gonna be able to see another one right here. Let's say we missed this, waited for another move up, we didn't break this high, form okay, extreme. Always the best way that works, in my opinion, are the divergences on the extreme areas, which is the 600, 800, and 1000. Same thing goes for the bottom side. You can see we try to, this is a major resistance, right? Because the high of the day we got rejected, big move. This can be if you're trading SPX 0 DTE, this big move down here, 20 points, you can make a lot of money. I'm talking about 500 to 700 in one contract if you get the top. And if you think about it, just watch this. This is a order block, right? I play calls here on Friday. Look at this low right here. This is technically the same low, a few cents off. Look at this. Look how this bullish divergence. Look at the nice move up. I didn't take the trade all the way up because I usually take the trade. See this low right here? That's what was my target. So I took the profit right there. And be disciplined. If you have a target, don't have the hopium believe, oh, you can go high. Yes, you can go high, but it can happen just like this. Imagine here, you can go higher, then boom. Look at, you lost all your profits plus your money. So don't be too greedy trading 0 DTE contracts. They don't hold value really well. You guys all know that the theta kills your premiums. If you're trading 1 DTE plus, that'll be a different scenario. But be reasonable with your targets, which mine was here, this previous low. You can see that we got rejected right there a little bit. Look at it, consolidated a little bit. TICK was forming this consolidation, and then you see bigger move up. Take your profits, weigh the consolidation, see if you're holding levels, which from you would be holding above this low. You can see we holding. We went below, but we didn't close below. That can be another way to play calls again. Lock your profits. Don't give your money back. Just get back in. Roll your contracts. So let's say we're here, from here, right? 41.35, you're 41.50s. Sell your contracts, get 41.60s, 41.60, or even 70. Whatever works the best. But don't be greedy. Lock your profits. Now, let's move a little bit to the second part of the day, which you can see I have the lunch break from 12 p.m. to 1 p.m. And the key levels I try to find is the low of the lunch and high of lunch. You can see the orange lines. And you can see that we are ranging inside these levels for basically to the end of the day. And we faked the breakdown, went all the way half the day again, dropped, and then we broke out. And we holding so far. So what I usually like to do is, as I mentioned before, let's say I don't have any trades, right? I start for those divergences to form, as you can see here. Let's focus on the white dots first. Look at, we have this order block. We made a bullish divergence. Look at this lower low, higher low. On the key level, it can be a nice setup right here. It doesn't mean it's gonna work 100% of the time, but it's a nice, and the risk reward is great. So I would get in calls here, and my stop loss would be here on the low, a tie stop. Boom. I took a trade exactly at this level. Nice move up. I believe I sold early. I didn't sell all the way up. 41.70s from $90 to 160, I believe. And then now let's focus on these red dots, right? Look at this bullish level. Same thing. A zone, high of the day. That's a key level. Made a bearish divergence. You can clearly have a risk. Look at this. Look at the higher highs, lower highs. These are bearish divergence. You can play this pullback. Look how many times we tried to break this level. We didn't. You can trade the pullback. Again, my goal is to, on these setups, pretty much end of the day, is like 30 to 40, 30 to 80 actually, is what I'm looking for as a profit on each contract. If we have a clean move like this, you're gonna be up more than that really fast. But that's what I'm looking for. And if you see, again, a little later, we broke down, right? Making those lower lows. But look how TICK was showing strength. We never made lower lows. We touched the extreme, cooled off. See how the move wasn't that big for TICK cool off, went to zero. And then one big candle, look at this red candle, went all the way to the extremes. Another cool off, another lower low, but TICK was showing strength. The overall market was showing strength, making this bullish divergence. And you can get in here, right here, because this level you can see is an order block right here. Because you have this high, we broke this high. The previous red candles, those are order blocks. Right here. Let me show you. Order block, right there. Change the color for same ones as the previous ones. See it. There you go. Order block. So look at this. Order block. This is a clean setup. If you don't like to risk from try to time and find the bottom, just wait for the break above the pre-market. The lunch low. Like we see here, broke, test it, close above, and then you can get in calls. You can ride all the way of this. Let's say you got in calls, right? And then you start seeing again, bearish divergence. You start to expect a pullback. So you scale out, wait for a pullback, so you can get in your trades. In your calls, if you believe that we're gonna go higher. We had this bearish divergence, a cool off. We see from the low to this high move. This is below 50% of retracement on Fibonacci, which is a level that you can start getting calls again. That means that the price is in a discount. So if you're gonna move up and then you're trading above the 50% retracement, it's considered premium price. So that means that it's not a nice level to buy calls on the upside. So look how we made a bullish divergence below the 50% retracement. Retracement, and then you had a nice move up. And you guys know, trading 0 DTE, this move, you can literally write a contract from like 1,000% gains, a 10x play really fast, like really easily. So this is what I like to do. Hope you guys understand. If you guys have any questions, let me know. Try to use those divergences to scale out. But if you're not in a trade, yes, you can expect a move back, but don't be too greedy on those pullbacks. Primarily if you're in a strong uptrend day or downtrend day. And the way those levels, those divergences, to be major levels. You can see that every time you have those divergences on the major level, here, 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 all those, they had a nice move up. And you can literally take one trade and be done for the day. Another thing that I wanted to mention, besides my clean chart, I like to use the ATR levels and the ribbon from SETI, where I always, you see I have those layouts up here, where I just move between them to see, just to have an idea. And this is a new indicator that my mentor Drippy is a great trader. He created this 11 a.m. rule, and you can see more the detailed explanation on the description of the indicator. Is a great indicator, guys. Definitely should be trying to use. You can see the neon colors, which is showing that momentum is strong, and when you see the magenta color, is just the, see here, this is breaking now, right? But the magenta color is showing that there is no strength. Expect a pullback. So it also helps. So I like to switch between those layouts, just to see where we are, and I go through different time frames. But the main one that I like to trade is the 1 minute, and on my clean charts where I set up my levels on the day. And the indicators I have is the lunch break, which plots the lunch, day, weekly, monthly, and yearly open. You can see that we have right here weekly open, day open. It just plots those levels. This swing is just showing these high lows, because sometimes can be distracting for me to be, okay, let me plot here, and then I'm missing, you know. So when I have something that just plot those, I mean, also looking at them, it's just easier sometimes than you try, because I have missed trades trying to, okay, hold on, this is a high here, this is a high here, and I can miss trades, I can miss some moves. So I have this swing where it just plots the previous highs and lows, etc. So I hope this video helped you guys to understand a way to use TICK, and be patient. The setup will show to you. I can guarantee you, if you're patient, you're not chasing any moves, waiting for the nice setups, you're gonna find great trades that you might miss this big move, but you can get the next one. So don't go too hard on yourself when you miss a big move. Just be patient. The market will show you and will present to you another opportunities. Look how many opportunities on Friday we had. Let's say you didn't trade money at all, but you find these great opportunities at the end of the day. So just be patient, and you find those trades, and just trade the A+ setups. Don't force any trades, or you're gonna be stressed. You're gonna be going crazy, and you're gonna miss the clean and nice moves just because you're afraid of missing anything. That should be it for today's video. I'm gonna be working a IBKR video about fees and going over a few other things that some people might have some questions. But that's it for today, guys. Have a great night, and see you. Bye bye.